You believe that the bull market that started in March of 2009, the longest bull market in history, has matured into a speculative fever of rare proportions. In your words, a fully fledged epic bubble. Tell me more.
It would be surprising if you could have one that long that didn't end up with animal spirits beginning to freak out a bit. And this one has. The confidence has risen and risen until finally people are reaching for the greatest demonstration of confidence they have had in their investment career. They're borrowing more money to throw it into the market. Their belief in the market is profound. The common wisdom is that with the Fed on your side, how can you lose?
Hi, welcome to the video. That was Jeremy Grantham. He's a well-known British investor, and he's also particularly noted for his prediction of different bubbles. Today I woke up and I saw one of the greenest days ever. Every single position in my portfolio was up, and I think I made good investments for the most part. But in addition to my core investments, I've also been playing with penny stocks. And in this sea of green, my anxiety started to build up because in this bull market, everybody is going to seem like a genius, and that's what's happening right here. I have over 10 penny stock positions, and every single one of them is green, and that completely just defies probability. When you are playing at the roulette table, you shouldn't be able to win over 10 times in a row. And sure, I believe I'm picking the best penny stocks I can, but at the same time, these returns are completely insane. Penny stocks, it's a gamble. It's high risk, high reward. You're going to lose money. Versus if you invest in something like Facebook or Apple, you're probably not going to lose money. Your returns aren't going to be as high. So I started to dig a little bit deeper into this, and I found this interview. And in this video, we'll see what Grantham has to say about this bull market. And I know this isn't a feel-good video, but I think it's something that has to be done, especially as penny stock channels are getting pushed all over YouTube, and tons of people are making money, including me. People are going to get used to this and think this is normal, and they are not going to be prepared for a downturn. So let's take a look at this video. I'll give you my thoughts and also what I'm doing to protect myself from a potential worst case scenario.
What are some of the signs we'll all look at with the clarity of hindsight and say, of course it was a bubble?
If you want crazy ones, and you need crazy, by the way, that's the best timing. You look at the over-the-counter trading. I was a big over-the-counter trader in a speculative bubble. Last February, it traded about 80 million shares for the month, and it worked its way steadily through the year until November was about 380. So it had gone up 4 times. And then in December, it went to 1.15 trillion shares for the month. Having tripled, it then tripled again in the single month of December. I can't tell you what it's going to be in January. But these are spectacular performances. My own stock in QuantumScape, it came into the market at 10 and shot up to 130. At 130, it was bigger than General Motors or Panasonic. And this is a brilliant company, but it has no trouble admitting that it won't be producing any batteries for 4 years. So no sales, no profits, and bigger than GM. There is nothing like that in 1929, nothing of that scale, nothing like that in 2000. 1929, of course, ran into the Great Depression and global trade problems. So you really just want to look at the first leg down.
So Grantham is noting that the volume of trades has increased. There is a fever going on, and everybody is making money, and everybody's going to feel like a genius. But the reality is a bull market cannot last forever. This one started in March of 2009, and now it is 2020. It has been 11 years. How much longer is this going to go? I can't really say for sure. Now the question is, what am I going to do? If I believe that a bubble is imminent or coming, does that mean I'm going to pull my money out? Absolutely not, because even if we are in a bubble, the reality is a bubble can last a month, it could last 2 years, it could last 5 more years, who knows? And it also depends on what stocks you're actually invested in. Not everybody is going to have the same amount of inflated value that certain other companies have. For me personally, the way I'm going to protect myself with penny stocks, the way I'm playing it is that every single cent I invest in a penny stock, I'm ready to lose 100% of it. Obviously, this is not an ideal situation situation, but that's what I'm going in understanding. This amount of money isn't going to hurt me if I really lose it. I also set a mental note of how much it will grow, and then that's when I have to get my cost basis back. Getting my cost basis back is the most important to me, at least initially, because at the very, very least, I'm not going to lose money. So for a majority of my penny stocks, I want to see them ride. Me taking this risks means that I can't just take profit at 50% or 100%. If I'm doing that over and over again, in the long run, I'll lose. Certain penny stocks have to get 300, 500, or 1000% profit. That's how I make the risk of losing everything worth it. So a lot of these penny stocks, once I hit about 300 or 400%, I force myself to at least get my cost basis back. So the rest of the penny stock, it's basically house money. This isn't always easy because the moment you see a lot of green appear, you get greedy. And today I was battling that because so many of my penny stocks were up so much and the trend seemed to continue to push up. It took me actually about an hour to convince myself to take profit. And I even had to talk to some friends and ask them for their opinion. And them being objective third-party viewers knew the responsible thing to do was for me to take profit. And, you know, I like to try to guide people through these things, but even I struggle with doing the right thing. Today, it actually worked out pretty well. The moment I took profit, some of the stocks shot up a little bit more, but most of them actually dipped back down. Today was a really, really good day. So when you see movement like this, you should really keep an eye out for what can you take some money out of. Regarding my bigger companies, what do I do if I think there's a bubble coming? And the answer is I'm not going to do anything. So for my core holdings, the ones that are mega cap companies that make up the foundation of my portfolio, these are companies that I've done deep due diligence on and I have high conviction for. So these companies, I'm just going to hold because even if they are cut by 50% in some catastrophic crash, the fundamental thesis of why I invested in this company hasn't changed. If I'm truly bullish on these companies now, I should still be bullish on them later, even if people's perception of them is that they're worth a little bit less. These are long-term holds. As an investor, you have to understand anything short-term is not really investing. It's a type of gambling. Investing is about believing in something long-term. You could view investing almost like a marriage, except you can marry multiple companies. This isn't the perfect example, but I think there's some parallels. Before you decide to marry somebody, you spend time with them, you learn about them, and you realize that you really like them. You believe they can add a lot of value in their life. And when you get to that point where you want to make a commitment, you are making an agreement that you are going to stick with them through thick and thin. Just because you have one argument, there's one bad year or one bad dip, doesn't mean you immediately bail. A marriage is a bond, an investment is also a bond. But at the same time, if that partner has totally crashed and the core fundamentals of why you married them aren't applicable anymore, yes, you should leave them. But before you get into that marriage, and I'm just talking about your main core stocks that are generally mega cap companies, are generally safer, otherwise you shouldn't have put that much money into them anyways. These you have to have the conviction to hold on. Otherwise, don't call yourself an investor. You are just gambling, and that's okay, but just to know the difference. Investing is long term. What I'm also doing is not diversifying across different stocks. I like to hold a couple of stocks that I have high conviction in, but I am holding about 5 to 10% of my whole net worth in cash. I'm also holding percent of my net worth in hard assets, mainly collectibles. And that might sound like a joke, but this is serious. This actually gives me peace of mind. Cash is great, it's safe, but the problem is it depreciates. Right now, I am investing in Pokemon cards because they are usually limited print runs. A lot of their items actually grow faster than stocks. Finally, I'm also holding about 2 or 3% of my net worth in Bitcoin, and I really wish I had more, but some money got stuck in transit. I was waiting for a dip, and I didn't predict that Elon would change the game forever today. So I'm a little bit sad I missed that boat, but I would continue to build that position. So definitely diversify across different asset classes, and then just mentally be prepared and know that a dip or a crash could come at any time. Visualize that experience happening and make sure that if that were to happen, you are okay. Always prepare for the worst and hope for the best. That's super cliche, but it's cliche because it's absolutely true and it's very, very applicable to what's happening with the stock market right now. That's all I have for today. I mean, just enjoy it for now. Everyone should be enjoying it. It's very, very easy to make money. Definitely don't pull everything out, but just be cautious. If this was helpful, please consider liking and subscribing. It helps me out a lot. This is Green Knight Trading, where Squires become knights. I appreciate you and I'll see you soon.